All right, good morning, everyone. It is, let's see, the time is 8:45 in the morning of January 26th, 2022, and this is my pre-market strategy session. So today, the title of the video I put on here was lots of Wyckoff distributions. And the first chart that I have up is Tesla. And this is the prettiest distribution, that I have examples of as of right now. There's some other, you'll see the Qs, the SPY, and the RUT also have very similar distribution patterns, but they're not quite. I think they're a little bit further along in their developmental stage than Tesla is right now. So Tesla's risk range that I have is 1022 on the top end and 880 on the bottom end. And there are a couple of there's another interesting coincidence happening here, and that is that this red trend line right here, I don't know, let me make that thicker just in case it's hard to see on your terminal. So here we have, the low on the 25th of October, the low on the 21st of December, and then the low on the 24th of January. And they're all kind of touching on this downward sloping line here and finding support and then moving away. But it's consecutively getting lower. We've got lower highs also. And then there's the Wyckoff. If you know the Wyckoff distribution, then you know it. If you don't, then it's easy enough to look it up. I've forgotten. There are a whole lot of details to it that I've forgotten, but essentially this is a Wyckoff distribution. And so I think it's just a matter of time until Tesla decides to just continue moving down for the foreseeable future here. So interesting. I think I'll leave that up. Let's see what the fib retracement is showing us. Oh, wow. That's very interesting. Okay, so there's a lot there to unpack. I think I'll leave it for another time. I have a fib. Let's see. That's right. This fib goes back. The fib that I put on this goes back from January 21, late January 21, and it starts at 1620. So it's very interesting that it obeyed the Fibonacci here. Let's get all that other stuff out of the way real quick. So you can see here the Fibonacci that I drew. Tesla came down to the levels and used the levels really quite consistently, and then moved up and hit this 161. Yeah, that's the 161 level. Well, so now I think although we may be getting a bounce now to some higher levels on Tesla and on the Qs for that matter too, on the SPY, I think it's going to be relatively short-lived. I think this is just a reprieve before the next round of selling happens. That's the way that's the way distribution happens. That's just the way it goes. And that's the economic environment that we're heading into. So yeah, here's Amazon. Now Amazon is a little bit different. This isn't exactly a Wyckoff distribution, although it is definitely, if you add like 2 or 3 Wyckoff distributions together, you would get this. But it is definitely starting to show some weakness here. The high end is 392, and the low end of the range is 2701. Let's go up to the SPY, to the S&P. So this, and when I say the S&P is in a bit of a more advanced stage of the Wyckoff distribution, this is what I mean. So the distribution really, the topping pattern really started kind of back here. Well, this is the topping pattern right here, classic Wyckoff distribution pattern. And so here it goes. Now, I think that if we were to fast forward, say, I don't know, 3 months, it's really quite possible for this thing to do some of this for a little bit. Although I think actually the way that it's going to look, I think it's going to look more like this. and then boom, goes down. So yeah, this thing's gonna bounce around for a while, and it's probably gonna be there are probably gonna be days that are gonna be really hard to trade, but then there are gonna be other days where it's really obvious, what the trade is. My range on the SPX is 45.63 at the top end and 42.65 at the bottom end. NASDAQ, pretty much the same pattern. Top end is 14,841 and the bottom end is 13,253. Russell 2000, I'd be really surprised actually to see the Russell 2000 make it back up to 2145. That's the top end of the risk range. The bottom of the risk range is 1933. I think that if, and I'm going to put a marker on that one right there. If the Russell can make it back up to 2066, I'll start establishing a short position. The VIX, the risk range on the VIX, the high end on the risk range is 36.55 today. The low end is 20.42. So I'll use either, if it gets up here, I'll start covering my shorts up there. And if it gets down there, I'll start putting on shorts at 20.42. The DXY, the dollar. The dollar is going to strengthen. If I were to just look at the chart, I would say the dollar's hit its high for at least the next, 6 months. But knowing what I know about the economic condition, the dollar becomes a safety trade. It's safe to be in the dollar. Although, there's inflation, when people don't know where to go to put their money, whether it's in treasuries or dollars or gold or the risk assets and so on, they go to the dollar. It's just kind of the first position to go to, and so the dollar is going to strengthen over the next few months, and that's going to put pressure on commodities. And now it's interesting too, actually, something that I wanted to mention. Is that typically the economic environment that we're going into is bearish for commodities. But here we have oil, and oil's doing a heck of a job holding up. And then we have coffee, and coffee's doing a great job. This is really interesting. It's like suddenly coffee's become a consumer staple, and it's a safety trade in an environment that's turning down. Let me think of it. Let me find a utility. What is... there's one that I have in mind actually that I haven't looked at in a long time. Dominion Power, is that what it is? Let's see. Dominion Energy, there it is. Dominion Energy. Let's see what Dominion Energy is doing. Dominion Energy is looking pretty flat, but yeah, it's a safety trade. I mean, the utilities, people go to them because, people for the most part, they keep paying their power bill. And it pays a 3.23% dividend. So, I mean, if you have, $5 million and you want to park it somewhere, the energy, the utilities, is a pretty decent place to be. It's kind of a crazy looking chart right now, though. But anyway, okay. On the daily, so those are my risk ranges. And then on the daily here, probably just watching the same things as usual. Tesla, and I will be looking for opportunities to short Tesla. It looks like that is the trend that is in place at the moment, is the downtrend. And I will wait for it to, where's the other horizontal ray? There it is. I'll wait for it to reach the top end. So I have some time until I trade. If this thing starts looking really bullish, I'll take a trade to the long side too, for it to push to the top end of its range. But it's got to be the right setup. And so same thing with Amazon, same thing with the Qs, same thing with the SPY. EEM, actually I'm looking for opportunities to go long EEM. And my gold play is actually doing really well. It's interesting because it's a foreign, so let me go to my metals here. So gold volatility here is coming down quite a bit. There are, a couple spikes there, but for the most part, gold volatility is drifting downward, which is going to be good for gold. And here's my gold play. This is a South African company. They report once every 6 months, twice a year, and they're going to report here in February 17th. They report, and this stock performance is more in line with what the South African exchange is doing at the moment than it is with what gold is doing. If I were to overlay gold over top of that chart, the similarities, I guess they're kind of close. Yeah, they're not too far off. So in any case, South Africa is in a decent economic environment at the moment, and this is a gold producer or a gold miner that pays one heck of a great dividend, actually, too. Dividends at 8.75%. So, yeah, that's my gold play, and it's doing okay. I averaged into it between $14.12 and $12.09 here for, I think, $12.76 is where I'm in for on average for these shares. So it's rising. It's nice to see. I did get in front of this. I did get in here too early. And there's only one place, that you'll get punished for, being too early, and that's the stock market. So, yeah, I definitely got into this too early. I started averaging in back here in September of 21. I could have waited until November and December. And so by the time it broke above here, I was already averaged into my position, and it went up really high, and it came back down on me. And so I was doing some butt clenching there for a bit with this thing, because I was just like, oh God, this isn't going to just dump on me completely. But fortunately, the economic advisory, the consultation that I get for the money that I pay for a forecasting company, is they're good. So fortunately, it worked out. So otherwise, the trades today so far, I've been trading either Tesla, Amazon, the Qs, or the SPY. I have AFRM up here today. And those are, Tesla, Amazon, the Qs, and the SPY have been pretty much the bulk of my trades now for like the past 2 weeks. All four of them move quite a bit. And all four of them are, I don't want to say they're textbook or they're easy to trade, but they do provide a lot of opportunities in accordance with my strategy. So I haven't been trading much off of the scanners at all, actually. There's a lot popping up today on the scanners, but I'm not really interested. So here we have AFRM. And I don't know really what, look at this. I made quite a decent amount of money off of AFRM as it was popping up to finish off this. Let me get the Fibonacci out of the way here. I've got another Fibonacci on it. What about that one? Okay. So this is a cup and handle right here. And I caught it somewhere, I think it was after this bump up right here, right in here. And I traded options on this. I think I had 8 options. I started averaging into options. I've forgotten exactly where, but it was, let's see, I think it was right here. I'd have to check the dates again. I think I started averaging into options right there for the completion of the cup and handle here at 146. I was buying 145s down here, and then I actually wanted to average into 10. I think I only got 6, not 8. But anyway, I wanted to average into 10, and then here on the 6th of October, it just boom went up, and so I took some profit on it right there. It was enormous. It was $30 move, $30+ move on some 145 strikes. It was incredible. It was really nice. So here it is now, though, and it's popping up on the scanner this morning, but I don't think there's really anything there. Let's see, on the scanner, may have fallen off the scanner. I don't see it anymore. Yeah, I don't see it almost. Oh, no, here it is. So there are 55,000 shares traded pre-market, and it moved on me. The scanner just reset. AFRM, where did you go? There you are. 55,000 shares, 56,000 shares traded, up 4.6%. But this doesn't look anything more than, it doesn't look like anything more than technical bounce. And AFRM just caught my eye because it's one that I'd traded before. But here it is. I mean, look at this thing. It's down, well, it looks like 60%. Let's do this. Here's at the top. Good golly. Look at that topping pattern. And it's down 72% since November of 21 to January. Let's see, November, December, January. So 2.5 months, November, December, January, 2.5 months. And this thing has dropped 72%. Good golly. So, and yeah, check out that topping pattern. Look at this topping candle. If that's not a topping candle, I don't know what is. Definitely bearish here. I have some levels marked off here. I don't know what I was looking at. I don't remember at the time. I know this one right here is one that I was looking at for the cup and handle. So I don't know, long, short, I don't know. I mean, you know, I don't have any idea. I just put it up here because I wanted to look at it. Now I'm not interested in it. It looks pretty much like garbage to me. Okay, so really, you know, before I take any risk on, you know, any sizable risk, I'm going to keep my risk pretty small. I will be looking for counter trend bounces probably today, tomorrow, the rest of the week. I think Powell speaks today, and he's undoubtedly going to say something that makes everybody feel better about, you know, the markets and so on and so on. I think it's going to be short-lived. I think that you know, we'll get a rise out of Powell in his speech today, and so I will be looking for, you know, obviously, I mean, look at the pre-market. You know, the pre-market, the you know, the SPY is up 1.56%. Tesla pre-market is up 4.38%. Amazon pre-market is up 2.65%. The Q's pre-market up 2.23%. Everybody's expecting something from Powell today that's going to, you know, be like, hey, it's all clear, but the economic environment that we're going into is not that at all, especially if the Fed is going to tighten into GDP and inflation slowing down. So, all right. Good luck out there, everybody. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.